Thanks for joining our live superannuation broadcast today here at the law offices of Parent and Parent LLP, the IRSMedic. We sort of dragged ourselves out of bed just so we could make sure that people in Australia will see this.
That's
I think
right.
It's about 4 p.m.
It's
Sydney
4
time.
p.m. in Sydney right now. Yep. That's right.
I'm joined by Anthony Parent, one of the founding partners of Parent and Parent LLP, and we do want to talk about some updates we found on the superannuation funds.
Yes.
Now, we represent U.S. persons around the world. We find that foreign retirement plans sometimes they have nasty surprises in them. This is also true of U.S. persons living and working in Australia. Now, superannuation funds, basically it's a law that this money has to be put into the fund. So if you're working in Australia as a U.S. person, this does apply to you.
Right.
Okay.
And you said there were some, and there's some contributions that are going up, some requirements?
Yeah. So employers are required to make superannuation contributions. The government sets minimum standard for contributions. Right now, it's been 9.5% since July 1st, 2014, planned to increase gradually from 2021 to 2025 to 12%. So decent amount there. Now, what we find is we actually have a lot of clients that call us. They're living and working in Australia, and they're like, oh, I'm supposed to report offshore accounts, foreign accounts, but I don't have foreign accounts. I'm living in Australia. I have an Australian account. That's not foreign.
Yeah, right.
Yes,
right. So it's really not a foreign account.
Until one of your buddies is like, no, foreign to the U.S. You're supposed to fill out FBARs.
Right. And how are you, like, well, no, I only have a small bank account that doesn't go over $10,000. I don't have one of those things that needs to be reported. Your superannuation counts.
Yeah.
That's something that needs to be on an FBAR. A lot of people find that. And, the superannuation program, I mean, I would say it's a pretty good success. Mm-hmm. The goal of Australia is that everyone has at least $1 million in their super. And as we see, like, oh, yeah, it's been happening. So it's great. It's really been working, which is great news, except you forgot about those 3 letters of the IRS. And this is, for any U.S. person.
Now, let's say, let's start with the easier part of this, which is if you're an employee.
Yeah.
Right.
The relatively easier part of this. Mm-hmm. So what happens? Okay, so if you think about your superannuation fund, it's not some money, or it's not something that you're holding. It's not something you personally hold. It's somebody else is holding it for your benefit. So what that is a trust. So if you're in the U.S., I guess you would have a trust return to file, but you don't get to file the domestic one because it's a foreign trust, and that is your 3520A form. So there's our first horrible piece of lingo that we have to introduce ourselves to is Form 3520A, and there's significant penalties for not filing one. And if you don't file one, your entire tax return, the statute of limitations on assessment remains open indefinitely. Forever, right. And so here, that's just one of these nasty little forms. Even if your superannuation you started, maybe it's very modest right now. Even if you had $10,000, $50,000 in it, you'd still have to file that 3520A.
As well as the FBAR.
As well as the FBAR.
Okay.
Yes. Even though, it's kind of the same information here, guys, right? And it sort of is. You're saying, here's my asset. And it also might be something you have to report on your 8938. So 3 different times. Well, your 8938, you would reference your 3520.
And this is the simpler
This
case.
is the simpler one, right.
Tell me about the more complicated.
Okay. So that's where you are when you're an employee and so you are putting contributions in and your employer is putting contributions in.
Got it.
Okay. That is, and the test is what the level of contributions are. And most of our clients who are employees, that as long as it's an employee's trust, you don't have to recognize any gains that occur into it, only things on distributions.
Okay.
So that's where our optimal situation is. What we get into situations is there's situations where people work for themselves or they have self-managed superannuation funds. Because if you think about a self-managed superannuation fund, who's holding that in trust for you? Basically, you're controlling it, so it's kind of you're holding it in trust for yourself. Well, that's where we get into something called it's a grantor trust for the IRS. The opposite of an employee trust is not an employer trust, rather it's a grantor trust because you might not be an employer. So the grantor trust is a little nasty because they're just saying, well, you're an alter ego of yourself, basically. So it's not really something held in trust for you. So we're going to get you, we want to tax you on what happens every year. So when you're doing a streamlined foreign disclosure, they're going to be looking to for the last 3 years. And so you have a lot more compliance work to do. There's a lot more to do. And then also, if there's any mutual funds your super is invested in, which is more than likely it is,
Yep.
You're going to have some onerous passive foreign investment company income to report. So with the Australian supers in a grantor trust, you're really hitting on some of the nastiest forms around the 3520A and a 8621 for your PFIC. And now, and the test. Now, this is what the official test of whether something is a grantor trust or employee's trust is based on contributions.
Okay.
Did you make more contributions than your employer? And then when you're self-employed, well, how do you classify that? Well, that's another story. And if you think about it, it doesn't make all that much sense. If you think about contributions as control, doesn't make sense. Well, just because someone else contributed doesn't mean you don't have control over it. That's always something I noticed. I'm like, oh, what a kind of ridiculous test. But okay, all right, sure, that's a test. We go for it. And a lot of times it benefits our clients to say, okay, we're gonna take that. And we mentioned this before. Dennis Prager Law did a FOIA on this issue to say, hey, what is going on with the IRS? And he on this particular issue with the Australian superannuations, and he discovered that there's a secret test the IRS is working on.
Oh.
And the secret test is going more of a test of control. What control do you have? So even though you have published tests, there's a secret test that the IRS has that said, no, we're going to disregard that. This is really the test we need.
Wow.
So will the real test stand up?
Yeah.
Right? And we don't know. And so when someone's looking for advice, it's like, well, we have some options. We could do it this way. Here's the risk. We could do it this way. Here's the risk. And so, this is a perfect example of why, foreign taxation, even if somebody, you're talking about, you can have somebody with a very straightforward situation. I'm an employee and I have a retirement fund. That can lead to one of the most complicated issues around because, I'm employed in Australia and I have a superannuation. That could lead to way too much.
Yep.
And also part of the difficulty is that the U.S. Australian tax treaty is terrible. If you're in Australia. If Australia had a tax treaty like the US-UK tax treaty, this would be a piece of cake. And so if you are in the UK watching this, you are in a great, it doesn't matter.
Yep.
If it's tax deferred, essentially in the UK, if it's tax deferred in the UK, it's going to be tax deferred in the US, as long as it's retirement. Whereas in Australia, that's a big question mark. Maybe, maybe not.
We're not getting help from the IRS. We're not getting help from the ATO.
Right. And we don't know what the answer is going to be. There's going to be litigation and there'll be, but we don't know. And so, I think that's where it's up to the taxpayer to say, okay, what am I comfortable with? I know that, and where it really makes a difference is that you will have to report, when you're going through one of the programs, if you have unreported income, if you have unreported FBARs, you really need to go through some sort of program.
Yep.
Because otherwise they can come back and be all mean and nasty to you, and look to hit you with some significant penalties.
Again, the willful versus non-willful is big.
And then also what type of treatment they want to give your superannuation, whether or not they want to hit you with these, it's really grantor, or if you can claim it's employee. There's not a lot of litigation here. There really isn't. It's going to be coming. And one of the things one of my clients did point out to somebody who's giving superannuation insurance. And my first reaction was
weary.
like, right, well, that's exactly my first reaction. It's like, there's no way. You can't give
superannuation insurance.
Superannuation, yeah, Glenn Beck in advising superannuation insurance. Protect yourself, protect your family. So I'm like, there's no way. This has got to be BS. But I called and I talked to him, and he's, no, I can get the insurance policy. I go, well, who's your underwriter? And he said, it's Aon. And I'm like, okay, that's a legitimate company. And so I tracked down who was in charge, and I talked to him. I said, well, you've been doing insurance policies on these supers? And he said, no, I talked to a guy about doing one.
Oh.
He goes, yeah, I just talked to him, actually. I'm like, okay. I said, have you ever done one? He goes, no. I've never done a superannuation policy. Anyone else there? Like, no, it would have gone through me. And I said, okay. And I said, well, here's my situation. I have someone who might be interested in getting a policy underwritten. A 1% premium is what he said, what's the amount? I got, under $4 million. He said, no, not going to do it. Well, first of all, I have no idea if that's premiums high enough. Second of all, I need more to insure than $4 million. He goes, if you get someone with a $50 million, then that's something we'd be insuring because the underwriting costs, it's not worth it for us.
What about a pool of
And then I said,
people?
well, what if I aggregated some claims together? And he said, yeah, okay. If you want to do that, similar situated people, I can aggregate some claims. And so that's really one of the reasons why we're doing this video.
Yeah.
If you're interested in getting some insurance, we need a bunch of people who may have the employer or the grantor trust to insure. And he said, get 50 million aggregate pool. He goes that of assets, and then maybe we have, then that might be worth it at that point. He said the premium he doesn't know what it's going to be because it's like an insurable risk. My job would be to write the memo to say what I think the risks are, and I think we know here's the official test, here's the unofficial test. So there's some risk, and their underwriters are going to do research too to say, okay, here's what we're going to come up with. But tax insurance is a legitimate thing. It does exist, and they need to take a look at everything, but they need a bigger pool. Okay. So we're hoping that our friends in Australia will share this with their other U.S. friends, and so that maybe we could all get together and work together to get some protection. And
what you can do is you can either call us or email us. It's 888-727-8796, info@IRSMedic.com. You can also check out LinkedIn. We've got a U.S. superannuation group on there. It'd be a nice way for people to sort of connect. So search LinkedIn for that. And any communication you have with us is subject to the attorney-client privilege. You can like and comment below. You can subscribe to our channel for updates on this and other tax issues. I want to thank you so much for joining us.
Yeah, and I would just say, and if you could also share this with your super advisor too, because they'll probably know a bunch of other U.S. persons, and that's really where we're trying to get the word out that there is things we can do to mitigate risk, but we all need to be working on the same page.
Awesome. Let's go to bed. Thanks for watching. IRSMedic, the law offices of Parent & Parent, LLP, real tax attorneys for tough tax problems.